All right, let's talk about the indicators that you're going to find on your charts. We're going to be talking about the Bollinger Bands, which are these blue lines, the 20 period average line, the 50, and the 200. I like to look at the blue lines, the Bollinger Bands, and the candlesticks as if they were fish and water. Now, the candlesticks are the fish, and the Bollinger Bands are your water. Fish cannot survive outside of water for very long. You may see, if you go fishing or you've been on a lake, you may see a fish jump out of the water, but he goes right back in. That's how your candlesticks are. You're going to see that your candlesticks will jump out or peek out of the water. Like here, they jumped out, but they always go back in. Kind of peeked out and it went back in. Peeked out here a little bit and it went back in. They cannot survive outside of this Bollinger Band. And what the Bollinger Bands are tracking. They kind of track the high movement, the high price movement, and the lowest price movements over the time frame or over the life of the chart. The other indicators I want to point out here at the top are the 20 period moving average line, the 50, and the 200. And you'll just simply hear me referring to them as the 20, the 50, and the 200. I like to think of these three as an army. So your 20 period average line is going to be this thin blue line in the middle of your candles. I look at it like an army of 20 men. An army of 20 men is easier to fight than maybe an army of 50 men or an army of 200 men. So the way these moving average lines work, they provide a support or resistance level for your price movements or for your stocks. And whether they're support or resistance depends on where the candles are in relation to each line. So again, I look at them like armies. So 20 is going to be looked at as if you're fighting an army of 20 men versus an army of 50 men and an army of 200 men. So your 20 men are going to be this blue line. Your army of 50 men is going to be this orange line. And then your army of 200 is going to be this long black line. Now, let's see here, about here on the chart, the candles run into the 50 period line. As you can see, they kind of just ran through the 20 and then they came to the 50, and the 50 was a little tougher than the 20 was to break through. So they kind of sat there, and as you see, that orange line supported the price movement, or they supported the candles. So it kept them, the orange line or the 50 kept the price from falling so far. Like you can see the wicks kind of peaked down below the line, but for the most part, this line supported the candlesticks in staying above that. Now, that's why it's considered support here, because the candles were above it and it kind of held the price up. It supported the price. So that's why it's considered support here. But then, as you can see, you get over here on this side of the chart, and the candles, they kind of ride along. The 50 was providing support for a while, but then the candles went through the 50, the orange line. At this point, when the candlesticks go through that line, and the candlesticks are now below the orange line, it's considered resistance. So it could provide some sort of resistance, keeping the candlesticks down if it wanted to. As you can see, the candlesticks went back up to the orange line, but it did not provide resistance, or it did not keep the stock price down, because the candles went right through it. The first chance it got, it went straight through the line. Now, it's important to know and be mindful of these moving averages, the 20, the 50, and the 200, because as you're trading, and your candles are getting close to one of those lines, you want to make a mental note as to whether it's going to provide some support or if it's going to provide some resistance. That way, if you're counting on the stock to go up, you see it's, going down, but it's going to go up soon. And you see that it's getting close to the 50 or the 200, you can say to yourself, it's possible that this line is going to provide some support. So yes, it's falling, but it's possible that this line is going to provide some support and turn the price around or make the stock go back up. And as you can see, that's what it did here. This chart does not show the candlesticks getting close to the 200 period moving line, but like I stated, it would be a lot harder to go through the 200 than it is the 50, because again, we're looking at it like it's an army of men. You have an army of 20 men, an army of 50 men, and an army of 200 men. So they, again, will provide support or resistance depending on where the candlesticks are in relation to those lines.